Hi, I'm Dominic Picarda here for InvestorsChronicle.co.uk and NakedTrader.com to take a look at what's going on in the precious metals markets. And I want to start with gold. I'm a huge gold bull, and I have been for about the last 8 years. I think gold is heading very much higher over time. And I think that some of the bubble talk we've heard recently, the talk that gold is now getting entering in bubble territory, is just plain wrong. But at the same time, even I have got to admit that the risks of a larger correction in gold in the not too distant future are actually quite great. The market for gold is beginning to look quite like silver back in the spring or so, because we've had this near perpendicular rise in gold from early July or so up to the recent highs. Gold has put on something like 30% in a mere 8 weeks, and you can see it's gone up in straight line fashion, and that is never really very healthy within a bull market. A healthy bull market is one that advances in stages, where the price comes back, consolidates its recent gains, builds a base, and then makes a further break higher. Straight line moves often end up in straight line reversals, and you can see that if we go back and look at what happened in silver back in earlier this year. You had this incredible run up here, and then it gave back all its gains or gave back a lot of its gains from that phase in style. And if we now look at where we are with gold, you look down here. This is the monthly relative strength index, the long-term measure of momentum, and the momentum reading as of just lately has gotten up to around that sort of 81% level, and that's very, very high indeed. And what you need to do here is to go back and look at previous incidences where gold got similarly overbought. And we can pick out one here in the beginning of 2008, which is beginning to feel like somewhat like the situation we're in at the moment, economically and financially speaking. And you can see then we got a 34% pullback in gold over the next 7 months or so. In 2006, we also got the same sort of effect. You had a big run up in gold. Gold got very overbought. And you got a 23% pullback. And we have to look back further in time for other episodes where it got similarly overbought in the early 80s and late 70s. 3 times when gold got similarly overbought, and you got then these pullbacks of 30%, 45%, and a much bigger one of, some 60% or so over time. So the risks of a correction, even in a strong bull market like this, are becoming more and more as long as gold remains at this level. And I think a big correction in gold, when it happens, is going to be a very healthy thing, because it's going to blow a lot of the speculative froth off of this market, and it's going to provide excellent buying opportunities. I would like to see it ideally come back to maybe its 21-week exponential average, or maybe the next one down here, and that would imply a drop in the gold price as of now to the $1,600, maybe the $1,500 range. But even then, even with a massive fall like that, gold would still be, in my opinion, very attractive. The long-term trend would still be very much up, so that wouldn't bother me. And let's just take a quick look at where gold, or where my projections say gold could be heading over time. And I think that $2,000 is pretty much a done deal. In fact, we may even get $2,000 before we get the sort of bigger sell-off that I'm calling for. But beyond there, I think there's a strong target here at $2,150, and then more significantly up here, $2,350. That's kind of a big one, and it's a big one also for psychological reasons, because around that level is where we got to in real terms back in 1980. The gold price then hit some $850, and which in today's money is somewhere up around 2,300. Over time, I think we're going to go even higher than that. But that's a story for another day. I don't want to get ahead of myself here. So I think there's plenty of upside potential left in this one. In the meantime, I'm still happy to play this with short-term trades on the long side, and I'm looking for intraday pullbacks to bring back gold to attractive levels, at which stage I'll be looking to buy in. You can see the levels there, my daily levels in my Outlook note every morning at investorschronicle.co.uk. I want to take a look now also at silver. And silver's really quite interesting right now because obviously earlier this year we had that enormous pullback in silver after the incredible run up into the autumn, where we pulled back some 35% in a very short time frame, in about a month or so. Frankly, I would have liked to have seen that correction go deeper than it actually did, and it's a sign of the strength of this bull market that it didn't actually go any further like that. But I was calling at the time for a 30-35% fall, and pretty much I was spot on. It would have been nice had it gone further still, but there you go. So as of now, silver looks much less overstretched on the upside than does gold. It's nowhere near registering an overbought weekly reading, and it's pretty much the same story on the monthly chart. Well, it's somewhat closer to being overbought on that basis, but there's still plenty of room for silver to advance. And the only problem being that I think if we get a bigger pullback happening in gold, it'll be very hard for silver to blaze its own trail, to separate itself from what gold is doing. So while I'm interested in silver, it's pretty much on a shorter term view for now, as I think it'll get dragged down as alongside gold in the event of a bigger pullback in that market. And I'm looking for a move in silver over time, though, back to these highs that we saw around $50 back in the spring, and ultimately quite some way through that. I think the next targets we've got up around here, around $53, $54, and then on to the next one up around $58. I'm more bullish short term, perhaps, about silver. I think it's got some more upside potential from here. And once again, I'm looking for shorter term trades here, targeting a move, at least in the near term, up around to the $46 region. And as before, I'll be publishing these my levels daily and my preferred entry levels on investorschronicle.co.uk.